Welcome back. Here is a very small video with only a few remarks concerning another form of tax liability in Germany, an intermediate form, again, between the limited and unlimited tax liability. That's called now the extended unlimited tax liability, because here the unlimited tax liability is extended to persons to which it normally would not apply. So to give you the overview, we are now here, personal tax liability and tax saving opportunities or tax saving chances and how the legislator reacts. Well, first the rule in German law and then a slight hint or glance on similar rules in other legal texts or systems. There is in Germany, apart from the unlimited tax liability, so the duty to pay taxes for your worldwide income, also an extension of that tax liability, not an extension concerning the scale, because worldwide income is already the maximum, more is not possible. What is extended here is the scope of or the set of persons which are covered by unlimited tax liability. What is included is persons with German citizenship living abroad, but far from all of them. Only those persons with German citizenship who are not already unlimited tax liable because they live in the country. If they live abroad, are employed by a German state institution and are paid from the budget of a German state institution. But that's not enough. The additional condition is then that they are only subject to a taxation similar to a limited tax liability in the state where they have their residence or habitual abode. That is a condition which, below the line, is usually only fulfilled by German diplomats and comparable people, because everybody else will in all probability be covered by the unlimited tax liability, or however they call this, in the country where they just currently live. The only persons who cannot be touched under unlimited tax liability in their guest country is usually diplomats. So 1.2 extends the tax claim to them. Furthermore, family members living in the household of these persons are also included into that extended unlimited tax liability if they are German citizens, always, or in case that they don't have German citizenship, then only if they have no income at all, or only income which is subject to German taxation. That means a diplomat can also include in his or her tax declaration the spouse and the children are treated as unlimited tax liable, so you can claim the one or other allowance for them. In principle, that rule is rather beneficial, favorable for these people, because if they live abroad but are taxed under the rules of unlimited tax liability, they will have the chance to all the deduction of the personal allowances, so special personal allowances and all the rest. But on the other hand, there is another effect which is usually overlooked or not discussed too much in literature. Imagine a person who is very, very rich and becomes a diplomat. Then that person could, in the country where that person now moves to and works as a diplomat, cannot be taxed according to the worldwide income that person has. On the other hand, it would not be taxed in Germany, so it would probably, at least not with the worldwide income, so there would probably be no worldwide income taxation at all, and that might lead to the effect that a part of the income of that person escapes taxation completely. For example, imagine you are a diplomat, you have, let's say, a nice salary from your diplomatic job, but you also have interest from German bank accounts, which you inherited or so of 1 million a year. If you then were limited tax liable in Germany only, the interest would not be covered by regular limited tax liability. And, well, additionally, your country where you live and are working as ambassador could also not tax that amount. So there would be a considerable gap in the taxation of your personal income and wealth. And that is a gap which is automatically also closed by 1(2) EStG. An additional remark, 1(2) EStG, that extended unlimited tax liability does not apply to retired persons, only to persons who are still on active service. So that really narrows it down to mostly diplomats. There are sometimes similar rules where people are subjected to unlimited tax liability even if they do not live in the inland. The most well-known example is Article 13 of a protocol to the European Union treaties, especially Protocol number 7 of the Treaty on the Functioning of the European Union. That's a protocol on the privileges and immunities of the EU. And Article 13 says that when it comes to the application of income tax rules, wealth tax, and inheritance taxes, and the application even of double taxation treaties concluded between member states, then officials who work for the European Union and who have moved only because of that to another member state shall be treated as if they had never left the country which sent them or delegated them to work for the European Union. So if you are a German and apply for an EU job, you will still be treated under German tax law as if you had never left Germany and still have a residence in Germany, irrespective of if you really still have a second residence here or not. You will also classify for all double taxation treaties of the European Union member states as if you still were a resident not in Belgium or so, but in Germany. The condition is naturally that you moved only because of professional reasons. So if you also had, or first had private motives to move to Belgium and then living already in Belgium applied for a job at the EU Commission, then that would not apply. Then there is even a concrete rule on inheritance tax. Your movable property will be not taxed in the country where you stay because of your duties to the European Union. That is rather a consequence of the idea that you are regarded as still living in the country which sent you to the European Union, because under international treaties, if they exist, movable property is usually assigned to be taxed in the country of residence of the dying person or of the donor of a gift. Yeah, so that's a highly interesting rule, which is not very often known. By the way, what is also very often ignored is that if you work for the European Union, your salary is exempt from any taxation in the member states, but that on the other hand, then the European Union levies an own tax on your salary so that you don't get away completely untaxed, because they would regard this as not convincing. That's Article 12, if you want to find that out. That's a legal basis for such a European Union tax, which is only limited to payments of the EU to their own officials. Yeah. If you want to get some background and look up where you can find the legal basis for the immunity and the not being taxed of diplomats in their guest countries, you can see that in the Vienna Convention on Diplomatic Relations. And there is an Article 34 which definitely says diplomats shall be exempt from taxes, but there is a list of exemptions, and that is sometimes surprising. For example, estate and inheritance taxes can be levied although you are a diplomat. That is something which rather sounds surprising and might create the one or other problem. Yeah, okay, that's already everything for this topic. The next one, you have seen it here, will be the optional unlimited tax liability. That's a case where Germany grants you the right to opt for unlimited tax liability if nearly all your income is from Germany. That's a measure which is intended to grant you the advantages of unlimited tax liability, so deductibility of personal tax allowances, and that's again a topic for another small video which comes later. Thanks for watching.